Hello Wolfpack, take a look at this. I want to show you something straight off the bat here. We've got the S&P 500, right? S&P 500, this is what's going on with it. Downtrending resistance line, whatever. Rejecting off that resistance line right now because obviously macro situation is kind of reversed a little bit back to bearish. And so we've seen that rejection on Bitcoin and we've seen that rejection on the S&P. But if we go all the way back, okay, and actually let me bring up the daily chart and we can get this done a little bit quicker. We go all the way back to 2008. Now, some people might remember this, right? I actually pulled up this fractal in the past. I'm pulling it up again because it looks entirely relevant still. 2008, we take a fractal from here down to the bottom in 2008. We'll bring that all the way back to what we have in 2022, and we'll try apply that, and we'll see what happens. We can see that, hey, look, this thing is actually, let me get it perfect, very similar, right? It's a very similar structure. Right, so something like that, if we apply it, we can adjust it all we want. Yeah, we're kind of skewing the fractal by adjusting it. But the point is, this is a very similar pattern, all right? And there's no denying that. I mean, if we spent the time, actually, I'll take the time. I'll be back in a second. Yeah, look, it's not perfect by any means, but there's very clearly some sort of pattern going on here in which it's very similar to 2008, right? We can see we had the same M formation at the top. Let's go back to the daily chart, and we've had the same downtrending resistance line like we had in 2008. This is not a coincidence. These corrections happen in the same way for a reason. Why? It's because a pattern of market psychology, and obviously market psychology directs where the price goes, because if people are bullish, they buy. If people are bearish, they sell. Price goes up and down. A pattern is repeating here. This is the same type of correction we had in 2008, and hence you could expect it will be a similar result. And that result means that the bottom is not in for the S&P 500. That's what the fractal suggests at least. Now, obviously a lot of that lies up to the Federal Reserve. If they suddenly decide they're going to stop raising rates, or if they suddenly decide that inflation is topped out, whatever, they wouldn't decide that, but you can observe that. Then, yeah, maybe, okay, that fractal's invalidated. But the point is the fractal is suggesting we go lower. And flipping back to Bitcoin, that's interesting, right? Flipping back to the macro chart for Bitcoin specifically, that is interesting for a few reasons. Well, one of the reasons being is that we don't think the bottom is in yet as per the 4-year cycle theory. Let's go ahead and actually bring that up on this S&P 500 chart. We'll go to my 4-year cycle theory prediction. We'll bring it up on the weekly chart. And here we go. So the 4-year cycle theory is a date range trend, right? It's triggered by the halving. It's very much true regardless of whether it's a date range trend or not. It's a true thing. It's a true thing. The halving every 4 years triggers a bull market on Bitcoin. That has never not happened. And after the bull market, there is a year of bear market. That has never not happened. And so it is a trend. And extrapolating that trend, and we can actually take measurements from within that trend and apply it to the future. And we can see that those measurements are predicting we see a Q4 bottom on Bitcoin. Somewhere between October and December is where the bottom will be on Bitcoin as per that date range trend. That is the prediction that I've made since November 2021. That is a prediction that I will stick by until it's invalidated. At what point would it be invalidated? It would be invalidated at a break above 28.6k. As you can see, 28.6k is the region that held for support during the entire 2021 bull market that I'm circling right now. If we break 28.6k, that would be an indication that we're back in, we're not back in bull market territory, but we're out of bear market territory, right? Breaking that would be, okay, yeah, the bottom's in. That's when you'd admit the bottom's in. However, until that happens, we have to stay vigilant here. We have to stay logical because our prediction for the Q4 bottom is still valid until that happens. And what we have now, which is what I was referring to before I got sidetracked, the reason why it's so interesting that the S&P 500 is probably not bottomed out yet as per that fractal is because if the S&P 500 is not bottomed out yet, it suggests the macro situation is bad, and it suggests that Bitcoin's not bottomed out yet, which would line up with the 4-year cycle theory. And as we can see on Bitcoin, we've seen in the last 24 hours or 48 hours, a drop below the 200-week SMA. Now, we have 24 hours, actually 22 hours, until the weekly candle closes. And provided it closed below the 200-week SMA, that's bearish for Bitcoin because the 200-week SMA is a very important MA. It's a very important moving average. We can see previously in 2015, 2018, and 2020, it marked the macro bottom. Now, this time it hasn't. We actually dropped below it. We've come back above it. And if we drop below it again, that means, hey, we dropped below it, we had the strength to get back above, but we were unable to sustain above it, so we dropped back below it, which is extremely bearish and is a very good indication that we'll be seeing lower lows on Bitcoin. On top of this, we actually have a bear flag formation on Bitcoin. Let's remove some of the stuff here so it's easier to see. Bear flag formation on Bitcoin, right? Which suggests, hey, yeah, maybe we'll see a short-term bounce. We do have stochastic RSI bottomed out. We have reached the bottom of the Gaussian channel, for example, which will provide support. We have also got the Bollinger Band saying we're oversold. We have got a horizontal channel on the shorter term as well. Let me bring that up. And we've got bullish RSI divergence. Yeah, look, we'll probably see a short-term bounce. There's no doubt about that. We might go as high as like, I don't know, 22.6K, something like that. We could go very high on this bounce. But the point is, regardless of where the short-term bounce takes us, unless it breaks the channel to the upside, it's not really a good indication of anything long-term. It's just a short-term bounce, just a dead cat bounce, right? So what we can suggest is that, hey, you know, yeah, we might see a short-term bounce. We probably will see a short-term bounce. It might go relatively high, but ultimately, according to everything else we've looked at, it's very likely we break this channel to the downside. And as you can see, if we break that yellow channel to the downside, we actually have support from the major macro uptrending line. And if we break that channel downside, we'll be retesting that major support. And if we lose that support, then we will go to 17K for our first potential chance at an actual bottom on Bitcoin, right? So we need to be seriously considering this now on Bitcoin. There is a solid chance we've dropped below this channel. And if that happens, there is a solid chance we'll retest the macro uptrending line. And if we lose that macro uptrending line, that's when you get super bearish on Bitcoin. Now, I consider myself macro bearish purely because I have no reason to be macro bullish, and the macro evidence, in my opinion, is still bearish. But I'm not entering 1,000 short positions or, selling everything or whatever, because nothing's happened yet, right? So I'm a confirmation trader. Even though I'm admitting that right now, yeah, the market's bearish, I'm still not willing to jump into positions. I'll jump into short positions when that macro line is lost. It's very important you guys understand that. I've had a lot of confusion about that. People are saying, if you're bearish, just short. It's like, that's not how the market works. You need to wait for confirmation. It doesn't matter what your prediction is. You need to wait until that prediction becomes valid by a breakdown, and then you can take trades. Then you can take action. I don't suggest that anyone trades yet until the channel or the macro support line is broken. But at this point, to clarify what I said in this video, short-term bounce, sure, there will likely be a short-term bounce. Don't be so surprised if it happens. If we break this channel to the upside, that's when you start actually considering a macro shift here. Now, one thing I want to mention as well, and this is probably going to be the title of the video, right, is, maybe not, is this macro downtrending line stemming from November 2021 through to March 2022 through to near the current price action. And we can see that as per the channel, provided we remain within the confines of the channel, we will be forced to make a decision on Bitcoin, either down below the channel or up above the macro line by September 18th, right? So within a month, we will be forced to make a decision. There's no more time to consolidate, right? September 18th is the last possible day we can be consolidating. We'll be forced to make a decision on Bitcoin at that point. That is the last possible day. Most likely, we'll see it happen, within the next 2 weeks, right? That's what I'd say. Within the next 2 weeks, we'll most likely see it happen. So yeah, that's kind of a situation on Bitcoin. Now, Ethereum, same thing, different. I was going to say same shit, different day, but it doesn't really make sense. Same thing, essentially, downtrending macro line, rejected off the macro line, or at least near it. We've come back down to support. We've dropped below the support now on Ethereum. So we've lost the support on Ethereum, and so we're trending towards 1,400 here on Ethereum. So let's see what happens there as well. So without further ado, I'll end the video there. I hope you guys found the video informational. Now, before we end it, I want to, actually, yeah, forgot about this. Look at the poll here. The poll is, I do a weekly poll, is the bottom in on Bitcoin. Now, people said yes in the past 4 weeks from oldest to newest, 26%, 37%, 36%, 39%, and now it's 32%. So that number has gone down a little bit, but still about 1/3 of people are bullish on the market, which means there's 1/3 of people, and that's within my bearish channel as well. You can see, so you can assume it's actually like 50%, which means that there's no grounds to make the majority is always wrong argument yet, because the majority of people, I don't know, maybe the majority of people aren't even bearish. Who knows? As per the data I've seen there on a bearish channel, I'd say it's probably true that maybe like 50-50, half people are bullish, half people are bearish. That's just speculation though. But regardless, now we'll look into Wolves Crypto VIP. If you're interested in becoming a VIP member, if you're interested in getting trading signals, you can click the join button and you'll gain 4 trading signals a week. prioritized reply to comments, a 2-hour lecture on market psychology, and exclusive Telegram group access. If you're interested in signing up to an exchange that actually cares about its users, unlike Binance, because they literally don't even have systems in place to prevent exchange-driven scam wicks, which means they're happy for you to get liquidated for no reason, essentially. And also, if you're interested in getting into an exchange that has a protection fund, right? This is very important. Now, you've heard the phrase, not your keys, not your crypto, right? And although that is true, even on BitGet, the point is, BitGet actually has insurance, right? It has insurance. So if something happens on the exchange, something big happens on the exchange, there is a solid platform of support in which you can email BitGet, you can contact them, and you can most likely get your money back depending on the circumstances. They got 6,000 BTC and 80 million USDT in reserve. So there's still a chance you'll lose your money. You still should probably withdraw to cold storage, but the chance is significantly lower. On top of that, you got half the fees of Binance, and you got non-KYC, which is great for various reasons. So sign up to BitGet using my referral link in the description below. And then lastly, the Crypto Academy is a company developed by myself and Megro Crypto, in which we're teaching people technical analysis. We're teaching people how to trade successfully. And we've done that through a 10-unit course with slides, videos, worksheets, and a trading diary. If you're interested in that kind of thing, go ahead and sign up using this email link. So you'll send an email to cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information that you need. So thanks for watching. Hope you enjoyed, guys, and I'll catch you in the next one. Cheers.